Welcome back to Chipstock Investor. Let's talk about Salesforce. On this episode, we're going to talk about a few different things. The first thing we're going to cover is that newsy item you may have seen out of Klarna and how it's cutting out Salesforce.
Actually, you know what? Let's just address this point right here, right now. So, in Kasey's words, I don't get carried away with this. Is this spell trouble for Salesforce and for companies like Workday, enterprise software as a service in general? Is AI development coming for it? Is this the end of the line? The answer is simply no. This is window dressing from Klarna, which is hard at work getting ready for an IPO, and they want to maximize the value they get from their IPO. I think that's about all we need to say about that.
Okay, let's move on to point number 2. Is Mark Benioff on another merger and acquisition spree? And if he is, why is he doing that? And we'll finish it off with a small adjustment to our software as a service portfolio, thanks to NVIDIA. Let's talk about some of those merger and acquisitions from Benioff.
Okay, maybe we should do like a timeline of events here. So, of course, accelerated computing, generative AI, ChatGPT kicked this off. Behind the scenes, NVIDIA is really doing a lot of the heavy lifting. But stage one of this rolling out to the software industry was pretty simple, adding chatbots to the existing software stack. Salesforce did this like pretty much everybody else did. They have their Einstein AI system that's been at work for years. They added a co-pilot version of Einstein so that you can chat with your company's data. That was early in 2024, but things really started to get interesting on the merger and acquisition front here in September. Salesforce signs this very, very small deal to acquire this startup called Tenix. And what does Tenix do?
They have voice agents.
AI voice agents. Yeah, we're looking to add that to our Blackwell upgrade.
I know, we could really use this.
Yeah, apparently we have robot voices.
It'll make us sound more natural.
More natural. Good stuff. They're also acquiring this business named Own. Bigger deal, $1.9 billion. And this kind of goes along with Salesforce's transition to a data company. We'll come back to this in a moment and why this is important to this conversation about AI and mergers and acquisitions. And now a little bit of a detour here, just a few days later after this, the folks over at Andreessen Horowitz had this little blog post about every white collar role will eventually have an AI copilot. And some of those AI copilots or AI agents will actually replace some of those white collar workers. No news here. This is something that everybody has been talking about as being a risk to humanity since generative AI became a thing.
What will I do with all my time when an AI agent takes over this position?
Well, you don't have to worry about replying to YouTube commenters telling you that you have a robot voice. Oh. So that's good. And then we have Agentforce as announced. This is Salesforce's AI bots. And then in tandem with this is happening right now at Dreamforce. They signed this deal with NVIDIA to use NVIDIA tech to speed up the development of these AI agents. What are these AI agents going to be doing though exactly, Kasey?
Salesforce lists a few different use cases. You can see crisis management, like a recall or a service outage. An agent would be able to handle that. Real-time weather impact for travel and logistics, and real-time customer support resolution. The goal of this is to unify and harmonize structured and unstructured customer data in real time, according to Salesforce and NVIDIA. That is to be used with their new cloud product.
Yeah, Data Cloud. Again, Salesforce making that transition to a data platform, not just a CRM and service platform. Obviously, lots of acquisitions made in recent years that have been building Salesforce up to this point. And then also along with NVIDIA becoming a strategic partner, Salesforce also signing this deal with Google Cloud so that some of Google's workspace products work in tandem with these new Salesforce AI agents, all aimed at increasing the productivity of those white-collar jobs that Andreessen Horowitz seems to think are at risk of going away. Maybe they are, maybe they aren't. Okay, Kasey, it's obvious Salesforce co-founder and CEO Mark Benioff is back on the merger and acquisition hunt. That's not going to sit well with a lot of more conservative investors. Totally understandable. You don't have to be comfortable with it. You don't have to own Salesforce. That's fine. Can Salesforce afford to go back on an M&A spree?
Absolutely. Look at that cash on balance, $12.6 billion in cash. They do have some long-term debt, but they also have some long-term investments as well, as you can see in that dark blue bar. They can afford it.
Yeah, the 1.9 billion purchase of Own, not a big deal. I'd much rather see that cash get deployed into some sort of startup that can maybe reaccelerate Salesforce's revenue growth. And speaking of revenue growth, this has been the hot topic this year. This is, at this point now in 2024, by far Salesforce's slowest pace of growth ever in its 25 odd year history.
But as they add these new acquisitions to the mix, we could really see this revenue growth start to accelerate again.
Absolutely. And that's important because the cloud, be it the new infrastructure being installed, the new accelerated computing infrastructure from NVIDIA being installed into cloud environments, or if you're just talking about actual SaaS, subscription-based software, be it for enterprise or something else more consumer-facing, it doesn't really matter. It's still a secular growth trend. It's still growing double digits every year, somewhere in the mid-teens percentage range. Salesforce is now growing below industry average in a secular growth industry. They need to do something to get the growth rate back up again. So if it means some strategic mergers and acquisitions to layer in more AI services on top of that data cloud, then so be it. They need to do it. They need to use that cash somehow. This is something now that I want to turn our attention to because, okay, here comes the M&A spree again. And I can already hear the complaints coming. Salesforce is terrible at mergers and acquisitions. They overspent on acquisitions like Slack during the pandemic, but the actual grown-up financial metrics, the ones that actually really matter when measuring a company's per share growth over time, says quite the contrary. We've owned Salesforce. This is one of our older holdings, especially individual holdings in the software space. On a per share basis, there's been nothing wrong with Salesforce's growth trajectory.
Not at all. That's a fantastic line.
Yeah. Free cash flow per share in particular, the dark blue line. And there's still a long runway of growth for this industry ahead. So GAAP per share growth, GAAP net income per share will eventually over time begin to converge with the free cash flow per share. So let's talk about Data Cloud and how all of these new AI agents that Salesforce is developing for its customers and potential customers. Let's use our hierarchy of the economy chart. Why is Salesforce suddenly trying to make this pivot to a more data-oriented business?
I think many of our viewers know that we like to say that data is actually the new oil in this economy, not semiconductors themselves, but actual data. Data is what makes these businesses tick. And the more data that is amassed, the more ways to monetize it. And since Salesforce has so much data, they now need to figure out ways to build out the infrastructure so that it can be monetized, so that customers are more intrigued to come to Salesforce.
Mm-hmm. Yeah, especially existing customers that already have so much of their data housed within the Salesforce platform. Obviously, it would be maybe not a lob pass, but low-hanging fruit for Salesforce to quickly develop these AI agents on top of that data. It's another way to monetize those relationships with their customers.
This episode is sponsored by Public.com. Heads up, everybody. Time may be running out to lock in a 6.9% yield at Public.com.
Right now, bond yields are at their highest levels since 2009, and you can take advantage with a bond account. But here's the thing. The Fed has signaled potential rate cuts in September.
And there probably will be more to come this year and into 2025. The good news is with a bond account, you can potentially lock in that 6.9% yield until 2028.
And then when the Fed does lower interest rates, your yield actually remains the same. It's locked in. But you must act fast to take advantage of some of those highest bond yields in years.
Discover how you can lock in a 6.9% yield until 2028. The new bond account only at Public.com. Check it out now at public.com/CSI. This brings us to phase 3 of this video. What are we doing with UiPath? This has been a small position in our portfolio, software as a service position. What are we going to do with UiPath and why are we doing it?
Yeah, we've addressed this a couple of times in past videos and have hinted that it might be time for us, in our opinion, to move on. NVIDIA is figuring out a lot of ways to work with big enterprise software providers. And what Salesforce is developing is maybe not an exact replica of UiPath and perhaps not as technologically complex, at least not yet at this particular stage, as what UiPath offers and robotic process automation. However, you can obviously see the trend moving that direction if the data is already in Salesforce and Salesforce is now using NVIDIA to accelerate the development and the number of use cases for that data and the AI agents. It's not too difficult to imagine a not so distant future where Salesforce and other big enterprise SaaS providers start to compete with some of these smaller providers like UiPath. So it's a tough decision, but this is a very small position for us anyways. So I think we're at this point now where we're looking to exit our position in UiPath. And for now, I think we're just going to maybe hold it in cash for the moment. We've been running pretty close to zero cash for over a year and a half. And we'll see what opportunities present themselves as we head into the fourth quarter of 2024, which we're optimistic about, cautiously optimistic about.
Always cautiously optimistic.
Always.
Thanks everybody for watching this video. Make sure you check out our sponsor, public.com/CSI. Link is in the description below. Gets you access to that bond account from Public.
And of course, also take a look at Semiconductor Insider. $5 a month gets you access to all of our show notes and our Discord community where we chat about all sorts of our research, including on Salesforce. Check us out over there.
Take care, everybody. We'll see you again soon at Chipstock Investor.